Here is a clear example of an established downtrend that has been accelerating towards the end of July. This same type of price action repeats towards the end of August with a likely rapid continuation lower, and this follows a minor neutral to slightly upward range, which forms a resting phase. Naturally, there are dojis here due to the hesitation and indecision in the market during these resting phase periods. It would seem like a likely continuation lower, however, the current doji with strong green volume puts doubt into the continuation of lower prices. The next candle is an inverted hammer, and this shows a gradual shift towards some upward intent with the brief high, followed by some indecision with the more narrow concentration towards the lower portion of the candle, which doesn't even trade below the low of the previous doji. In some ways, the emergence of this upswing may seem surprising given the overwhelmingly bearish context in the drop towards this 142 level, but the somewhat perplexing situation in the medium to short term is easily clarified when a long-term view is taken into account, where the 142 level has been of major influence and was a likely candidate to be the major support level to counter a major downtrend, such as the one we have been examining. Price does rise, but it was slow to begin, due to the influence of the upper boundary from the proposed downward continuation range seen earlier, around 155. Later on, there is an upward continuation, with the resting phase taking place throughout much of November, and that is in between these two large surges with strong green bullish volume. That is in contrast to the slightly bearish to neutral resting phase that has generally lower volume, and there are also dojis and reversal candles near the 155 level that acts as a short to medium term support for this downswing. There is some hesitation and indecision around this 155 area because it is the first point the market concentrates on to see whether a minor pullback will result in a major downtrend if the 155 level is breached, or it goes on to become an upward continuation with an upswing developing to build on the earlier uptrend. Another case where the market continues climbing higher to eventually reach a peak. In this case, once again, the defining feature is the upper wick rejection, just that general price action of not being able to maintain newer highs here. It doesn't matter that much if this could be called a thick gravestone doji or a plain bearish star. There is a long upper wick and the real body is concentrated towards the lower portion of the candle in an established uptrend. Furthermore, the next candle strongly closes lower to further confirm the market is unable to maintain bullish sentiment, along with increased bearish volume. This early downswing was quite crucial in the onset of the overall downtrend. However, there was a delay at the beginning due to the market unable to sustain the slight increase in bearish volume for a few days, coupled with the emergence of several candles showing lower wick rejection. This didn't create a counter for an upswing, but rather a more neutral range prior to the characteristic row of red candles with strong bearish volume to accelerate the downtrend into full swing. As would be expected, the previous lower ranges formed a very strong long-term support and major areas of contention. Naturally, there is also a good number of candles showing lower wick rejection as the downtrend falls onto these areas of support. Price recovers to re-establish above 155 and along the way there are some familiar features, with the uptrend gradually flattening, and that occurs due to indecision as seen with multiple spinning tops and dojis. This current candle is no strict bearish star, but it does show there is inability to maintain the highs with the longer upper wick, and overall the real body is concentrated towards the lower portion of the candle. Volume is also high, but it doesn't do much in terms of continuing the existing uptrend. More definitive movement as the market rapidly closes lower in the next 2 days, with a slight increase in bearish volume. This brief phase of deliberation in the face of increasing resistance and decreasing bullish sentiment leads to a very clear downtrend developing. Indeed, it is another large downward reversal. However, you can observe there is a slight delay at the beginning, similar to the previous few cases seen, due to some minor supporting ranges that managed to line up with dojis in the past and minor swing points. But the influence of that short-term decision from the past was quickly overcome, once again with the characteristic large row of red candles and increasing red volume. Despite the rapid lower accelerations, the 150 to 140 range showed the longer-term support was still intact, and it was able to oppose even this major downtrend. All the price levels marked out previously turned out to be of major significance in the future. They influenced price in both bearish and bullish contexts, and normally when the market is reaching such significant levels, there are significant reversal candles that form, along with dojis and spinning tops when there is indecision that forms flatter periods of trading activity. Such significant levels are no guarantees of support and resistance. However, if they are to be passed, it is often done so with large candles with strong volume, red to the downside, green to the upside. And in the case there is no volume, or the volume is not overwhelmingly high, this often occurs when there is a steady, consistent row of candles, such as when the 155 level was passed in June with relatively low volume.